Thank you very much for that. The other big story is the Indian rupee continues to plummet, hitting fresh all-time lows. 90.47 is the record low, beating last week's low of 90.42. Dealers attributed to more hedging demand by importers on signs that the trade deal may take more time and hence rupee recovery is unlikely. Lata joins in with what she's learned. Lata?
Yes, the previous low of the rupee of 90.42 reached on December 4th has been taken, and that happened actually around midday. We went to 90.48 and thereafter it's kind of remained at all-time low levels. The fall was surprising because today would have been a day when you would have expected the rupee to do well because the dollar index has fallen and so has crude. Crude is at 62, dollar index at 98. One would have thought this may not be the day when it will set a fresh all-time low. So this is a bit of a surprise. With stock markets doing well, the surprise only increases because one would assume that it is FPIs who are buying. Dealers claim it can also be importers who are buying dollars because now the street is almost veering over to a one-side view of the currency that it is headed towards 91. There are no two sides. Initially, when 90 crossed, the expectation was, that perhaps the Reserve Bank will block it there. Now the Reserve Bank clearly is not blocking any level. That the market is very clear. It's just maybe smoothening sharp volatilities by supplying. The cue today apparently came from the NDF market, that is the offshore market, where the rupee already was showing signs of weakness, and that's getting translated over here. The feeling in the market now is that the Reserve Bank is allowing this both in onshore and offshore markets because that seems to be a natural way to correct any trade deficit. Exports becoming cheaper because of the cheaper rupee and imports becoming dearer. You can see all steel companies, etc., are rising, partly because now the competition from China or competition from elsewhere becomes a little more expensive. There's more breathing space for Indian domestic makers. And finally, the statements that came from Delhi, the commerce ministers, the CEAs, the chief economic advisor, all of them indicating, saying that we can't rush into a deal is what the commerce minister approximately said. We have to look at every point. Seems to give the impression that the deal is not tomorrow or end of the year or something. It seems to be a distance away. People are speaking of March now. So that's again led to this one-sided view that, the rupee there is more declines. Let's not be surprised.
Okay, all right. Got that, Lata. Maybe you want to stay on and take some questions as well. We have Dhiraj, economist and FX strategist at ANZ Research, joining in. Dhiraj, thanks so much. Let's just take up those points. I think what Lata said made so much sense that the market has become completely one-sided now. There's no one calling for the other end at all. So it kind of then starts becoming a self-fulfilling prophecy, doesn't it? Can you tell us what you've noted in the market today and whether you're expecting lower levels even before the year ends?
Right. So thank you for having me on the show. Look, I completely agree that the expectations about USD INR are a bit one-sided right now. So once we had crossed the 90 level, I think some pain was taken out of the markets because some positions were booked. But I think fresh importer hedging demand could be coming in because most people do expect that trade deal more or less remains elusive. The comments from the CEA, etc., do not indicate any clarity that it's happening any time near in the near future. So I do think that most people are positioning on a one-sided manner as far as USD INR is concerned. Yeah.
Okay. So do you see lower levels, Dhiraj?
Look, I think the rupee weakness is further to go. As long as high tariffs stay in India's economic configuration, we are projecting rupee at 91.5 at the end of next fiscal year. But given the kind of momentum we have seen, those levels can be attained much sooner than we are currently projecting.
What about next year? We normally see fresh allocations when the year begins, and the FPIs will be now staring at a far cheaper rupee and stocks that have not run up compared to other comparable geographies. As well, we always know that the Jan-Feb-March quarter is a time when trade account also posts a surplus. So is January the new hope that the rupee will turn?
I would assume so. Seasonality could play out in Q1 of 2026. In fact, we have put Q1 forecasts at 90, which is appreciated from the current levels. But, the understanding is that fundamentally we are looking at a weaker rupee in the medium term as long as tariffs are there in the picture. But of course, point taken, seasonality could play out.
Dhiraj, the other thing that I pick up from FPIs, or those who talk to FPIs, really the interlocutors, is that now the Indian capital gains tax and withholding tax is hurting. Time was when returns from India was so high that these taxes could be paid. Now foreigners are losing on the currency and the stock markets have not really given gains in most counters. So the tax is a pain point. Is that a hope that will get addressed in the budget? Is there even a chatter with people you speak with?
I really don't think so, Lata. So if you look at the government's tax situation overall, it's not looking great. In fact, to me, there's a bit of a fiscal strain in the system, and the recent tax relief, which were, so to speak, support demand at large, would of course have eaten some fiscal capacity for the government. I don't think in the upcoming budget there would be space to do a lot more tax relaxation of any nature. Forget the capital gains tax or withholding tax for that matter.
Okay, all right, Dhiraj, we'll leave it on that note. So, not much positivity coming out of that conversation. I'll tell you what, Lata, speaking of FPI is returning, I was having this conversation just a while back on the Global Reset, our CNBC-TV18 Prime show with Adrian Moat. I asked him the same question. Are they coming back? And he said, you know what, even after the run-up in South Korea, those chip stocks are still looking good. I mean, the valuations are good. I have very little reason to allocate to India, given the current return profile.
They've posted 32% gains, Korea. Taiwan is posted 77% gains.
Yeah, the Kospi is up 70% this year.
Yeah, Kospi is up 70%.
But till September, they outperformed even more. In the fourth quarter, that is from October 1st till now, India is pretty okay. 2.5% up approximately, which is
talk of optimism.
We need it. We need it.
And IT from the October lows is up 12%. Okay.
15%.
Yeah, depends. 15%. Depends, yeah.
No, you're right that those two counters have to do well. IT because they're export earnings and they don't have any import buying.
Yeah.
Some of the exporters are value adding, so they're also paying more for raw material.
Yeah.
IT is a total gainer when the rupee weakens, and likewise people like your companies, steel. The competition is more expensive.
Lata, just to add one point with regard to steel, that safeguard duty hasn't come. The rupee has weakened a little bit. You have JSW Steel that's gone in there and done a deal with JFE. $2 billion is going to come in there, and Tata Steel is going to commit a big capex. You don't want to give me the safeguard duty. This is what I've done. Now, do you want to give it to me? I think they put it out there that we are making a strong pitch. We are putting down the big money. Give us that safeguard duty, 10, 11, 12% that you promised. I think the pitch has become stronger according to, just looking at the kind of news flow that I've seen.
But this rupee is hurting some of these oil refiners. Look at an MRPL, a Chennai Petro. So otherwise the market is green, but these stocks are down close to about 2.5%. In fact, let's get in Deven Choksi, MD of DR Choksi Finserv Private Limited on the show.